Hello friends, last video we discussed about the limited liability partnership form. Under limited liability partnership form, we discussed the meaning and the features of the LLP. Now in this particular video, we will discuss benefits and the comparison of the existing forms of the organization with LLP that we are going to discuss and the limitations of the LLP. Let us discuss one by one. First, we will discuss about the first benefits, then distinguish and the limitations. Now, whenever we will talk about the any kind of benefits of the LLP, LLP has there are number of benefits. Easy to form because minimum two persons are required to form the partnership firm. Now easy to operate because it is very easy to operate the business. They prepare the LLP agreement, and as per the agreement they can run their LLP. No restriction on maximum number of members. Now under LLP it requires to start their business with two members, but maximum number of membership there is no restriction, no limit. You can you can enter in your LLP maximum number of members whatever you want. There is no limit. Separate legal entity. Now in this particular organization, whenever we will talk about the LLP organization, and they have the separate entity, they have a separate entity means the status of the LLP and is different, and the partnership firm's status is different, both are different. Lesser amount of compliances because of the LLP, they don't want to spend certain amounts because compliance is moderate, level also moderate. Personal assistance, personal assets are safe because of the LLP. Personal assets are safe. Why personal assets are safe? Because of the liability. Whenever we will talk of the liability is limited to the extent of the personal assets. Less requirement of the statutory books, because statutory books means the books of records, and they want to maintain very few books of record. Less interference of government is not involved whenever if you form the LLP as per that. So there is no interference of the government. Easy in winding up because voluntarily all partners can decide to wound up, or sometime they can legally also winding up. Convenient for professionals, those who are professional persons, doctor, lawyer, architects, and sometime construction, real estate businesses, they can follow the LLP. Worldwide acceptance, it is accepted by the worldwide, even the in our India also accepted. It start from 2008. Now whenever we will talk about the comparison with the partnership from LLP and company, the legal status, the Partnership Act has no legal status, but LLP has legal status and company also has a legal status. Perpetual succession. I already informed in for uh, first our video. Uh, LLP has a perpetual succession. Perpetual succession means the continuous and long life. Company and LLP both have perpetual succession, but Indian Partnership Act 1932, they don't have the perpetual succession. Liability. Liability of the partnership in Partnership Act 1932, it is unlimited, but LLP and the company, the partners liability is limited and company's members liability also limited. Compliance level of compliance is very low. Here it is moderate and company has a very high. Dispute resolution mechanism, it is not available in the Partnership Act. It is also not available in the LLP, but it is available in the company organization. Dividend distribution tax, it is not applicable in the partnership form and LLP. It is only applicable to the company. Investment, it can make investment, cannot make investment in shares. Partnership forms cannot make investment, but LLP can make investment in shares and company also. FDI, foreign direct investment, it is eligible, it is eligible, all are eligible. Then non-banking financial corporation, it is not eligible for NBFC, and LLP also not eligible, but NBFC is eligibility for company only. Image for banker point of view is not favorable for partnership firm and LLP, but company has a favorable. Information at public domain not available in the partnership form, but LLP and companies, they disclose their books of records, they disclose their financial statements. Therefore, information is, it is available in the public domain also. So these are the certain main differences are there, and therefore LLP, partnership firm and company has their own separate status. Now limitations, what are the disadvantages? So whenever we will talk about the disadvantages, the extension of liability. In case of the liability may be extend up to personal assets of the partners, because liability is limited. LLP's partners liability is limited. No fund from public. LLP cannot raise the money from public. It has to depend on the contribution from the partners. A company can raise the fund from public because they are issuing the shares, debenture, bonds to the public. Not suitable for large business. LLP is not suitable for large business due to limited fund. Tax liability, LLP has to pay tax at a flat rate of 30% plus education fees as per the provision of the Income Tax Act 1961. These are the certain, and then legal compliance is also there. So these are the certain limitations of the LLP, and therefore such LLP cannot expand, develop their business. I hope you understood. These are the certain benefits and the distinguish between and the limitations of the limited liability partnership. Now, next things that we are going to learn in this particular chapters or module about the obligations of the designated partners, their role, rights, and duties, and the this type of partners, what kinds of duties and liabilities are there. That also we are going to learn in our next video. Thank you for listening.